Good afternoon and welcome to the CrossWORD CYBERSECURITY PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it received in the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Tom Alubi, CEO. Good afternoon, sir.
Yeah, thanks. Good afternoon. Thank you very much for coming to CrossWord's annual results presentation for 2022. Let's move on to the team slide. So just to remind you who we are as a team and who I have here in the room and online, I'm Tom Alubi. I'm Chief Executive of CrossWord. My background is setting up a number of companies. I'm also on the board of WPP and chair of the RFU. We have Mary Dow, Chief Financial Officer, in the room, along with Jake Holloway and Sean Arrowsmith, and we have Stuart Judd online and on the call as well. And just as a reminder, our chair is Sir Richard Dearlove, who's been the chair for the last few years, former head of MI6 and chair of trustees at the University of London. So I'll jump straight into the results highlights for our 2022 and split those into financial highlights and operational highlights. 2022 has been a year of significant growth. We grew revenue by 68% to 3.65 million in 2022. That was in fact our fastest year of growth since we joined AIM back in 2018. So we're really pleased with the speed and growth of top line revenue in 2022. Of that, 55% was organic revenue growth, and we were particularly pleased with the 81% growth in annual recurring revenue in 2022. We finished the year with 2.4 million in annual recurring revenue, and that, as I said, was up 81% versus the same point at the end of 2021. Overall, recurring revenue growth for 2022 was 54%, so more than half of our revenue in 2022 was recurring revenue. And the other thing we're very pleased about is that our average revenue per client was up by 40% year on year. And what that shows is that we are building stronger relationships with our clients, and our clients are choosing us to do more work with them, whether it's more consulting work, more product activity, and we are getting better at cross-selling products into our consulting clients, consulting into our products clients. So that model is working well and is proven by the fact that revenue per client is up by 40% year on year. In terms of operational highlights, we focused on growing the number of Risican users, and we said at the start of the year that we were aiming to have 1,000 organization users using Risican by the end of 2022, and we achieved that number. We're very pleased with that. We started the year with about 500, and we pushed hard on that to get to 1,000 by the end of the year. So that's been very good in terms of getting the product out there and into the hands of a large number of users that we can then cross-sell and upsell into. We talked in previous years about how we were working with a large aerospace and defence company and doing trials with them. And as a result of that, Leonardo UK, one of the world's biggest aerospace and defence companies, selected Risican to use to assess supply chain risks across one of their divisions. And that really underlines Risican's ability to operate at scale and also gives us another very large customer and reference point for other people in that industry and other industries to take note of. And there are opportunities to roll out Risican wider in that community. We also did one acquisition last year. If you remember, we had done 2 acquisitions in the previous years, but last year we did one acquisition, which was the acquisition of Threat Status Limited around March last year. And that brought 2 new products into the CrossWord fold. Trillion, which is a credential breach software as a service platform, and Arc, which is an account protection e-commerce platform. for organizations. So that's really good. And in fact, since we bought Threat Status and brought Trillion in, what we've seen is that the size of the sales deals being secured for Trillion has increased really quite significantly since we bought the company. And we've been doing very well at cross-selling Trillion into existing customers and opening up existing Trillion customers to CrossWord's wider set of services and products. Consulting has been doing really well in terms of increasing cross-selling activity and selling their services into Risican clients, and also introducing consulting services to our other products as well, Nightingale, our monitoring product, and other services and products. So just to remind you, CrossWord, we help companies understand and reduce cybersecurity risk. And the way that we do this is through a combination of people and technology in the form of software as a service and software products, consulting and managed services. And as we've said in the past, CrossWord established in 2014 and was admitted to AIM in 2018. Our focus continues to be to build a leading British cybersecurity company, and that is what we're very focused on across a range of consulting services and products. As I always say when I update on CrossWord, we are not a single product company. We deliberately have a portfolio of consulting products and services so that we can offer a full range of products and services into medium and large clients. And that's what we do. The market is continuing to grow and we're continuing to grow with it. So this year we're targeting an additional 50% growth in 2023, and we're targeting revenue to be 6 million in 2023. And we're quite comfortable of achieving that. If you like, 2022 and 2021, previous years have been about investing for rapid growth, hence achieving close to 70% growth in 2022. 2023, we're continuing to grow, but with an increased focus on profitability. So you'll see more of a drive to profitability as we push through 2023 and beyond. The cybersecurity sector is continuing to grow. There's the digital economy is growing rapidly. Sometimes people think that the digital economy has already been rolled out. Actually, there is a lot of work going on to companies going through digital transformations. And as they go through those digital transformations, the amount of digital cybercrime grows as well. And as you can see from the graph there, in 2015, the global value of attacks from cybersecurity attacks, the global value of damage was 2.6 trillion. By the time you get to 2025, that will be of the order of 10.5 trillion. So the damage from cybersecurity attacks is continuing to grow steadily, and therefore the need for cybersecurity solutions continues to grow. And actually, at the moment, there is quite a big gap between the size of the global market for cybersecurity and the size of the global opportunity for cybersecurity. What that means is that a lot of companies are just not at this stage spending as much as they need to spend and that they will be spending on cybersecurity. And you're continuing to see large-scale attacks. At the moment in the press, there's a lot about Capita, who were a victim of a cybersecurity attack that has impacted a large number of clients. And at the moment, the people that alleged to have carried out that attack are claiming that they're selling phone numbers, home addresses, bank account details, plans of buildings, security documents, and so forth online. So even big companies that are out there are often unable to completely protect themselves, and our job of reducing that risk is really important. In the FTSE 100, you'll find that companies often are spending budgets of 20 to 30 million a year on cybersecurity. And if you consider across the whole of the 100, that equates to sort of 2.53 billion of spend on cybersecurity just in the UK, just in the listed market alone. So there's a huge amount to go for still in this market, and we have a range of products and services that allow us to take that on. So CrossWord, as I said, we provide cybersecurity consulting and managed services, and we sell cybersecurity software as a service into these customer base. Our customers tend to span mostly mid-market companies and larger companies and public sector in the UK, and we've had some successes internationally as well. Our goal is to build high margin, high growth business of scale focused on increasing annual reported revenue, annual recurring revenue, which, as I said, is why we're particularly pleased to see that 81% growth in annual recurring revenue in 2022. That is a big step forward in that area. And as I said, we have a portfolio approach. We are not a single product company, multi-products and services. We have a broad offering for our customers. We create cross-sell opportunities, and by having that portfolio approach, it diversifies risk and opens up opportunities. Today, we're about 70 people across our London office and our Polish office. We have a small business in Oman, which is growing. We have a Singapore office to help us with our 24/7 monitoring. And increasingly, we've been doing work in Bermuda, which, as you know, is a major global reinsurance hub, because we do a lot in the insurance and reinsurance sector, and clients in London have asked us to support them over there as well. The timeline along the bottom shows you the growth of the company, and as you see in the last couple of years, we've done a number of acquisitions, software acquisition, a managed service acquisition, another software acquisition that has got us to the size that we are today. And again, as you see from the revenue graph, 2022, you can see clearly the step up in revenue as a result of the 68% growth, steady revenue growth through 19, 20, 21, a significant step up in 22. And as I said, 23, we're looking at another 50% growth on that, taking us to revenue of around 6 million. I'm now going to ask Stuart to pick up on the next couple of slides on services and products. So Stuart, over to you.
Thanks, Tom. So as Tom mentioned, we've built a portfolio of products and services that address different parts of the cybersecurity problem. This is based on the demand we're seeing in the market. We have our supply chain risk management platform, Risicon, which helps companies triage and manage their high-risk suppliers. This is supported by our consulting team, who provide a wraparound managed service around the platform. And we're working with a number of FTSE 100 and 250 companies and some large global equivalents. We have our monitoring, detection and response platform, Nightingale. This is a managed service using the platform and offers a wide range of cybersecurity services, from threat intelligence, monitoring and network protection, breach response and forensics. And we're finding a lot of success implementing Nightingale with our existing consulting client base. Our consulting team continues to grow, and this is made up of high quality consultants recruited from the Big Four, former military and intelligence and blue chip system integrator background. And we're working with over 125 clients now across multiple sectors, including insurance, financial services, nuclear and technology. And we're working, and we have been for a number of years, with one of the world's largest global S&P 500 insurance brokers. And again, we're starting to move and work with an increasing number of FTSE 250 and FTSE 100 companies. We like to work on a recurring revenue model with consulting, and this is driven by our virtual CISO services. And we're very focused on margin growth now following achievement of critical mass. And we're doing a lot of cross-selling. So we're taking our portfolio of products and services and we're cross-selling into our consulting base. And because a number of our consulting clients have known us and we've worked with them for a while, we're having a lot of success in cross-selling. And lastly, Trillian and Arc. Trillian and Arc mine the dark web for stolen logins and passwords, which provide instant threat intelligence reports to companies about their possible weaknesses and the likelihood of an attack. So we built our products and services based on client demand, and we're able to innovate and increase the value of each product and services based on some of the ongoing work with our current client base. Next slide, please, Mary. Okay, so the customer profile, typically over the last 12 months, we've been able to increase the move up the value chain in terms of the clients we're working with. So we're seeing a lot more success with the larger FTSE 100 and 250 clients, hence how we've been able to increase the average revenue, as Tom mentioned. We've got a broad range of clients across multiple sectors, so public sector, education, critical national infrastructure. We're doing a lot of work in insurance, both in consulting, managed services, and some of the products. Our typical client journey is we will often go in and either do a proof of concept with one of the products or some diagnostic consulting work. This will then usually lead to the six-figure implementation and transformation work. And what we're aiming to do is to move into the sort of 500k and £1 million per client bracket. And we're seeing that with the FTSE 100 and FTSE 250 clients, there's a lot of work out there in that sort of size. And as we're growing as a company, we'd expect to be onboarding and working with a number of clients in that sort of size over the next couple of years. As we grow, we're able to increase the contract size, and we're able to sell the clients a mix of products and consulting. And for our larger clients, we have targeted account plans where we're looking to sell them multiple products and services. We're looking to get them signed up for multi-year deals, and we're looking to have a high proportion of that revenue to be managed services and recurring. Next slide, please, Mary. Okay, so as Tom mentioned, we've managed to increase the average revenue per client over the last 12 months. This has grown 40% year on year. And our strategy over the next year is to continue to grow at a similar rate and to continue to increase the total number of clients that we work with. We've managed to do this over the past 12 months because we've scaled up our sales team. So we've brought in a number of new salespeople. We've set them up in their own sales room. They're on the phone all day looking to book meetings, and between them, they should be booking 40 to 50 meetings per month. They have their KPIs and targets up on screen, so they know how they're doing in terms of the number of meetings they set up and the pipeline they generate and contracts they close. We've got a list of our 140 clients up on the wall with all our different products and services, and they're aiming to get multiple ticks across each of the clients so that we're selling multiple products and services. And as I mentioned previously, we've got key account plans for our biggest accounts, and we're looking to sort of grow those accounts and increase the number of key accounts over the next few years. As we continue to grow, we'll be able to start pursuing some of the larger, higher margin contracts, typically where the sort of the big four or the IBMs of this world are playing, and we're seeing good success coming up against the big four. And we'll continue to be cross-selling. We've got a good, strong existing client base, and our clients quite like us taking the newer products that we've got. Our clients quite like us taking the new products or the additional functionality that we're implementing into our existing client base. Next slide, please, Mary.
Okay, this is back to me. Okay, so this is back to me, and it's just to update on our strategy and remind you, as Stuart said, we have a very disciplined sales process, and we apply that across our products and services with the systems that we have to support it. And that is definitely one of the main drivers of the success that we've had over the last year. We are increasing our cross-sell activity now that we have a stable set of CROSSWORD products and services that meet a range of needs. It puts us in a good position to be speaking to our clients about what their needs are and presenting them with other products and services that we have. We're very client-driven in that sense. We're not pushing our products and services onto clients that don't need them. We're talking to them about what their needs are. But the good thing is that because we have this portfolio of products, we almost always have something that's relevant to the issue that they are wrestling with. Growth, really important. We continue to drive the growth. I think that we need to get to a significant size of company in order to get the full value of what we're after, and 50% growth again this year, taking us to 6 million, is taking us firmly on that path. Revenue profile, as Stuart said, a focus on aiming for high margin recurring revenue. Recurring revenue is really important to us, and that's recurring revenue both on the product side and also on the services side as well. At least half of our consulting and services revenue is recurring as well, unlike a lot of other consulting businesses that tend to be very project-based. Our consulting business is very much recurring revenue based. At least half of the revenue is recurring on the consulting side. Contract size, we're moving towards larger, higher margin contracts. We're finding that as we get bigger, we get the opportunities to bid for larger projects. So whereas a few years ago, we might have been bidding for 50K, 100K projects, maybe even smaller than that often, now we'll get ourselves into positions where we're putting forward or we're responding to tenders in the multiple hundreds of K, sometimes seven-figure opportunities. And we can do that because the company's larger, the overall revenue is larger as well. And you'll see that as we grow as a company, as we get to that 6 million revenue and then go beyond that next year and the year beyond, you'll find that there will be bigger projects available to us as well. And on the international side, we're active in the Gulf region with our base in Oman. We're active in the Caribbean, where we're working out of Bermuda in the reinsurance sector. We have our base in Singapore to support our 24/7 monitoring service. We tend to follow clients and opportunities into these areas. We don't just say, that looks like an interesting area, let's go after it. We will go if there are client opportunities. We're active in various parts of Europe as well, again, driven by client opportunities. We work with governments in Europe. We do some work in the US, but only where we're taken there by clients. And all of this now is focused around driving our path to profitability. As I said, we've been very focused on top line growth over the last few years. And as you see, the 68% growth last year with the investment that we put into that is evidence of that. This year, we're just reining back the growth a little bit to 50%, but really focusing on path to profitability in the medium term. Company achievements, we're 70 people, staff of 70 people across 4 countries, mostly in the UK and in Poland, with a couple of other countries that I've mentioned. I've mentioned the main headlines there. 68% growth last year to 3.65 million, 55% of that organic revenue growth, 54% recurring revenue overall in 2022. So the majority of our revenue in 2022 was recurring revenue, 81% growth in annual recurring revenue, and coming out of the year with 2.4 million of recurring revenue as we came into 2023. We did a successful fundraise in September 22, raised 3.6 million. Mary will talk about the convertible loan notes that we've done just recently, where I put in another 250,000 and a couple of other loan note holders subscribed as well. As those of you who know will know that I've put in over £1 million into the business. So my wealth and my success is very much tied up in growing the value of the business over the coming years. We've executed 3 successfully integrated acquisitions since May 21, so 2 of them in 2021, 1 of them in 2022, and we're now cross-selling products and services from those acquisitions into our client base. We tried to do a transformational acquisition towards the back end of 22 and early into this year. We saw a company and we were in conversation with a company that looked very promising, would have been a quite significant acquisition if we'd been able to pull it off, and we put a lot of effort into that because CROSSWORD is a very ambitious company. We want to get to those significant revenue levels as quickly as we can, and this presented an opportunity to more or less double our revenue overnight if we'd been able to execute it. We worked on that for probably over 6 months, but actually weren't able to, it didn't come together at the end of it. So that acquisition didn't go ahead, even though we spent a lot of time and resources on it, which I don't regret at all. That would have been really quite transformational if we had been able to pull it off, but that didn't happen. So that's fine. We put that behind us, and we're focusing this year on driving organic growth and driving path to profitability. We will look at other acquisitions if they come our way this year, but actually our focus this year is on organic revenue growth and getting to that 6 million through organic growth, and then we go on from there. Products and services for cybersecurity products and excellent consulting delivery around that. We've been doing very well with Risikan piloting into the global aerospace and defense company, Leonardo, that has now turned into a relationship which we're very pleased about, and will continue to support them in securing and reducing risk in their supply chain. We launched a new integrated supply chain cyber practice. A lot of the attacks that you'll see in cybersecurity today are supply chain attacks, where people don't necessarily attack the target company, they attack the supply chain of that company, look for weak spots in the supply chain, and use that to attack the company. We've got a lot of experience in that area over the last 4 years or so, and we've got Risikan as a platform. So we've pulled all of that together into a supply chain cyber practice that is going out into the market, and we're getting into some very good conversations around that. We've built up our clients now. We've got some good FTSE 100, FTSE 250, Fortune, S&P 500 clients, as well as our mid-market clients and the more entrepreneurial ones, and clients in the government sector as well. So we have a really good portfolio of clients, and it is excellent to be able to cross-sell into that client base. And as Stuart talked about, we have a key account approach where there are several clients that we are really focusing on to build and deepen the relationship, understand their needs and understand their businesses, and make sure we can provide solutions to the challenges that they are wrestling with. There are significant opportunities in the Gulf region. That region has a lot of money at the moment as a result of oil prices and so forth. They are relatively early in terms of cyber maturity, and therefore the opportunity for us, where we have some very good relationships, to support organizations and governments in that region to improve their cybersecurity and reduce cybersecurity risk is a great opportunity for us. And we have a good partner out there, some really strong relationships that we're building on there. And we expanded into 2 other jurisdictions. We also launched a ransomware readiness assessment service in March 2023 to help organizations reduce their exposure to ransomware attack often the attacks that you see that are causing organizations trouble are ransomware attacks, and therefore being able to offer them a ransomware readiness service is getting us into good conversations and good pickup there. So company outlook, as I've said, we are targeting revenue growth of 50% this year to take us to revenue in the region of 6 million, which will be really good and show that we are really growing as a company and with continued momentum beyond that. We've invested significantly in 2022, deliberately, to grow top-line growth. I've always had a belief that as a company, we need to get to a certain critical mass, and therefore let's keep investing to get that top-line growth up there, which is the momentum that's taking us to the 6 million revenue we expect to achieve this year. And the focus, though, on 2023 and beyond is establishing a clear path to profitability. So we will continue to grow, but we will drive towards profitability now as we look for higher margins. We manage the cost base as we increase the revenue, and that closes the gap and gets us towards profitability. So you'll see that as we go through the year, and you'll see, as we've talked about, an increased emphasis on targeting larger clients that can make full use of CROSSWORD's range of products and services.
Thanks, Tom. So on this slide, we have our P&L. And just to reiterate, revenue in FY 2022 was 3.65 million, a 68% increase on the prior year. And that was 1.5 million increase. Let's pass that to Tom. And we had 81% increase in our ARR over the prior year. We saw the ARR increase across all areas. Risican increased by 43%, Nightingale by 29%, and our vCISO offering by 68%. So our organic growth increased by 55%, as Tom said earlier. So strong underlying growth as well as growth within our acquisitions. Loss for the year after tax was 3.4 million. The increase in costs in the year were for a few reasons. We had an increase in staff of 30% in the year. This reflected an increase in resources in sales and marketing and in products and product development. We had the full year effect of the acquisitions made in 2021, and we had the acquisition earlier in March 22 as well, which impacted our costs. Legal and professional fees increased by approximately 250k. This was, as Tom mentioned, relating to the opportunity which did not progress. So yeah, if you can pass me back that, thank you. So the next slide is just our P&L. With the impact of IFRS, it's quite hard to read from a balance sheet these days, but the number of significance on here is our cash at 2.1 million. The post-balance sheet event was the issue of convertible loan notes, which Tom referred to. He's taken a convertible loan note of 250k, and there were 2 others issued as well. So a total of 375k of convertible loan notes. Tom, I'll pass back to you to summarize.
Okay, so we'll move on to the Q&A now, but just to say, as a company, the story for 2021-22 was investing for rapid growth. We achieved 68% growth in 22. We were very pleased with that. We've done that very successfully, both through our tactical acquisitions and through our organic growth. The story for 2023 and beyond is continuing to drive growth, but to drive that in the context of a drive to profitability. And we'll do that by managing costs tightly, reducing costs in some areas, shifting from R&D to revenue generating activities. The whole company focused on revenue generating activities, increasing margins, and you'll see us get there over the medium term. So we're very comfortable about where we are as a company. We're very well set. We have the set of products and services that we want at the moment. We don't have a gap in our product and service set that we're looking to fill. We are actively looking at new areas with our clients. We're looking at what's happening in the AI field. We already use artificial intelligence and machine learning in various parts of our products, and we'll continue to do that in our products and across the company. So we'll get into the questions now. Does the moderator want to say something about questions, or shall I pick them up straight away?
Yes, please, and thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. But just while the company take a few moments to review those questions that have been submitted throughout the presentation, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, received a number of questions throughout today's presentation. Tom, if I could just hand over to you just to read out those questions and give responses where it is appropriate to do so, I'll pick up from you at the end.
Great, thank you. So the first question is, you operate in what seems on the surface a very competitive market. What's the USP that has driven the recent growth, and how are you managing the sales pipeline? I'm going to come to Sean, who's our Group Sales Director, to comment on the sales pipeline, if I may. But let me comment on the competitive market and the USP. It is a competitive market. There are a lot of cybersecurity companies in the market in the UK and internationally. So there's no doubt about that. It's quite a fragmented market. So unlike some other markets in technology and other areas where it's competitive but with just a few big players, in this market there are actually a lot of small players. Often those players will have a single product, and that may be a great product, but it's very sort of focused on a particular solution area, or they will have a single service line and they're very strong in their services, but they just focus on consulting and so forth. I think for us, part of what our USP is and what's driven our growth is this portfolio approach. When we're talking to a large organization, if you're a FTSE 100 company, you will have a whole host of needs on your cybersecurity side. You don't just have a single need. And therefore, you are often interested in talking to a company that has a range of things to offer, because it takes a bit of effort to establish a new relationship with a company, a working relationship, sign them up to your purchasing system, your procurement system, etc., etc. So if you've signed up CROSSWORD, and we can offer consulting, but we can also offer penetration testing, we can offer forensics, we can offer Risicon, Trillion, etc. It gives you comfort that CROSSWORD is a good partner to work with, and we've definitely seen that. So I think that's part of our USP. It's also the way in which we manage our relationships with clients. We are very relationship oriented rather than transaction. As a company, we are relationship oriented. So we get to know the client, we get to understand what their needs are, and we're not just piling in and say, hey, do you want to buy this? Do you want to buy that? We're understanding what their pain points are, what their needs are, and we're thinking about our products and our services and tailoring them to the customer. So we're not the only people that do that, but that is the way that we approach the market, and that has resulted in the results you've seen over the last year. Sean, do you just want to comment on the sales pipeline?
Yeah, in the last 12 months, we've implemented the MEDDIC sales qualification framework. So we manage the pipeline using that methodology. And what that gives us is discipline in terms of anything that goes into the pipeline has been through the right qualification framework to make sure that it's reliable and accurate. We can also, through technology and CRM, we can see visibility across all the different products and services in the pipeline and manage it effectively from that perspective. And then alongside that, we've also started to focus on a lot more marketing automation in terms of nurturing the pipeline through the sales process. So it's all about discipline, following that qualification framework and making sure that that's adhered to for all deals that go into the pipeline.
Okay, thank you. So second question, can I comment on the share price and how you think it might recover? The tech market is down across the board, and we're down with it. I think I probably personally feel that more than anyone else on the call. The value of my shares are probably down more than £2 million in value over the last year or so. But I was talking to, we were out talking to one of our institutional investors yesterday, and they were saying to me, Tom, you need to concentrate on the business, build the business, build the top line up so that you get to significant revenue coming in, get to profitability, and the share price on the market will reflect that. And that is the way that I focus my attention. I don't day-to-day worry about the share price. I focus on the business, building the top line, pushing to profitability. And I really do believe that when people see the scale of the company that we're able to build and the margins that we're going to be able to deliver, that will get reflected. As it happens at the moment, personally, I think the company is undervalued at the moment, which is why you would have seen yesterday I was in the market buying some shares. We released an RNS, and I think that that over time the market will see the value of the company. Is this the third question?
Yes, do you want me to read it?
Yeah, okay.
So the third question is, why do you stay listed and incur costs of listings?
Yeah. So the cost of listing, what would be the cost of listing?
Indirect and direct, probably about 200,000.
Yeah. So it's a not insignificant cost, but we are a listed company. That was always the plan, to be an AIM-listed company. It gives us access to investors. Investors have been very supportive of us over the last few years to fund the growth that we've been able to achieve, and we're comfortable being on the AIM market. We have good relationships with the AIM investors, with the institutional investment community, with the VCT investors. So really, and I've done private companies as well as and I'm sure other people on the call have as well. There are pros and cons. Sometimes the private markets are great, and listed companies look over at the private markets and say, wouldn't it be great to be over there? At other times, it goes completely the other way around. So we've got our strategy at the moment, which is to be an AIM-listed company, to grow that company, to grow the revenue, and to convince the AIM investors that we need to be fairly valued for the company that we're delivering.
So the next question is the visibility of the 50% growth. How confident are you this can be achieved, this can be delivered or exceeded?
We're very confident it can be delivered. As I said, we start the year, because we have this recurring revenue, we start the year with a good chunk of recurring revenue. We know the clients that we're working with. We have good visibility of the projects that are coming up. We have some areas where we know it's a bit of a stretch to achieve the target that we've got in that particular area, and we have other areas where we know we can overachieve. So overall, when we look at it, we're very comfortable that we'll hit that sort of growth level in this year in 2023.
So the next question is also about the public versus private. So I think we'll move on to the following question. Great to see management alignment of the interest through equity. How well funded are you in terms of executing on the strategy? Yeah.
So as I said, I've put over £1 million into the company, 250k just in the last week or so through the CLN, and as I mentioned, I was buying shares in the market yesterday. So we are absolutely aligned. The executive team has an executive incentive plan that's based on building value in the business. So we are very much a company that's focused on trying to build value. We will raise money later in the year. We've said that that's what we plan to do, which again is a good reason for being on AIM and having the relationships that we do with the AIM investors. And the market has always been very supportive of us when we've explained what we're doing, the growth that we're after, and this time we'll be very focused when we're talking to our investors about both achieving the growth of 50% this year, getting to that 6 million, but also achieving our path to profitability. And I'm confident that our investors will continue to support us.
Please, could you comment on the gross margin decline on last year? I think I'll take this one. So the gross margin of the business is quite complex because of the different product and consulting and managed services streams. We'll see various performances in gross margin throughout. We'll see improvement in consulting, and we'll see improvement in product gross margins. We've also changed our strategy in how we're reporting R&D. Previously, it was reported in cost of sales, and now we're reporting it below the line. As we move forward, we'll see that gross margin continuing to improve. We will have product revenues be proportionally more of our revenue, and as those costs are relatively fixed, we'll see the margin improve as a result of that. We'll also see consulting margin continuing to improve as they've reached critical mass and have a focus on improving their margin. The next question is, Risican, what is the percentage of paying customers and what is the turnover dynamics into paying from non-paying customers using Risican?
Do you want to talk about that at all, Mary?
So we have we've increased the number of users, as we know, to 1,000, and that is a mixture of non-paying and paying. The proportion of freemium customers is higher. It's much higher, and we look to those to convert them, but also to look into their customers to see if there are opportunities, and also to look to cross-sell our other products and services into those non-paying customers as well. It was a target we set for ourselves last year. This year, we're not charging ourselves with increasing the freemium numbers. We're clearly focused on increasing the paying customers and to ensure that the average sale is considerably higher than it has been, and we've achieved that as well.
We're adding new modules to the Risican product as well, and those will be coming out shortly over the next month or two. And what the other thing that we'll be doing is offering those new modules to existing Risican customers in order to grow the revenue within the existing Risican customer base, and also grow the value of the product to those customers, because we've got a lot of feedback over the last few years from clients that are using our product, telling us what they want the product to do and the way they want it to evolve. And we've responded to that with some really interesting new modules that our customers are really going to like when we get them into the market in the next month or so.
So what is the average revenue growth per customer? Where is the revenue growth occurring, and in which product line the add-on growth is reflected most? The revenue growth per customer is 40%. It was shown in the KPIs earlier, and we're seeing that revenue growth across the whole business. We mentioned that the Risican has been sold to Leonardo, so that was a relatively high value sale, and we're getting more and more of those. Consulting, as Stuart mentioned, we're looking at our key accounts and looking at growing those accounts, which is resulting in higher sales for consulting. And as a result of the acquisition by CrossWord of Threat Status Limited, the Trillion value sales are also increasing. So we're seeing it across all products and services. Please, could you comment on what level of turnover is expected to be required to break even based on current or projected product service mix? So this is something that we haven't released to the market yet, but we will expect to achieve our profitability in the medium term. We have stated that. So based on the current trajectory of 50% growth increase, you can probably extrapolate from that to determine that number. With critical mass, will the gross margin increase? Yes, we expect the gross margin to increase. I think we've probably already answered that one. Can you please split the market by state related, including state customers versus pure private business?
I think we're primarily private, aren't we? We haven't focused massive attention on saying we're going to be selling into sort of state customers or government. We have a number of local government clients, but we haven't focused our attention on, for example, selling into the Ministry of Defence and those sorts of areas. So our primary customers are private businesses or commercial businesses, and that's where we focus our attention.
Perfect. Thank you very much. I think you've actually managed to address all of those questions from investors. And of course, the company will review all questions submitted today and will publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Tom, could I just ask you for a few closing comments?
Yeah, absolutely. So CROSSWORD, we're an ambitious company. We are a growth company. We're an ambitious company. We grew nearly 70% last year. We're confident of growing 50% this year. Those are the sorts of growth rates that we expect to keep pushing forward with, but with an increased focus now on our path to profitability. In the past, the story has been about growing the business, raising the money in order to allow us to build the portfolio of products and services, grow the business, get that top line really moving, get it up to critical mass. And that's what we've been able to achieve both organically and through some focused acquisitions. The story going forward is that we will continue to grow, but with a very sharp eye on our path to profitability. And that's what you'll see over the medium term. We have a good wide range of products. We have a good, strong portfolio of clients, over 120 clients. We have our key accounts that we really focus on. These are big organizations that spend multi-million pound budgets on cybersecurity, and we are a key partner to all of them. We're a very strong management team, and I believe that as we deliver on that, we deliver on the top line, we deliver on profitability, we'll start to see that being reflected in how we're valued in the market. We're very comfortable about where we are. There's a lot done, there's a lot to do, but CROSSWORD is in very good shape in a very hot market, and we will continue to build this company into a scaled up and successful British cybersecurity company.
Perfect. Thank you once again for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of CROSSWORD CYBERSECURITY PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.